Couple things. I think the reason why the market took it so well is the market thinks that maybe the Federal Reserve has figured out that inflation is not going to be transitory. It's not going to be short term, that there needs to be dramatic action. And 75 basis points certainly is greater than the more conservative estimates that some had at 50 basis points. So I was very encouraged to see 75 basis points. And on top of that, what's incredible is actually predicting that there'll be another 50 to 75 basis points within the next 45 days. So the Fed is very clearly communicating they're going to take any action necessary to stem inflation. Now, the problem we're going to have here, Jeff, obviously, is are they going to tip the economy into recession when the consumer is already starting to pull back? The housing market in the U.S. is really locked up with mortgage rates close to 6% right now. And I think it's a virtual certainty that we're going to go into a recession next quarter.
As we've discussed around the desk before, Michael, you don't have to fear a recession, particularly if it is shallow and short-lived. Can we be sure that the Fed can actually pull that off? And where do you think we are in terms of the market's belief that we will get something like a September pause as the Fed sits back and waits to see exactly what its handiwork has achieved?
Well, whether the Fed's going to be able to do it or not is, we'll just have to wait and see, to quote Chairman Powell, as he said many times during the conference today. But I think that there is a belief that if we raise enough, let's say we raise by 75, we raise by another 75, that if there is a problem in the economy, if it's a shallower recession, which I expect it would be in the third quarter, the Fed actually has some room now to come back off of some of those rate increases. Let's say they go up 75, recession starts, and then they go down a quarter, then they go down another quarter. That's going to give some oxygen so that we hopefully can have some kind of stimulus so it is, in fact, a shallow recession. So I think it's definitely a reasonable possibility. In fact, I think that's our base case scenario is right now. We're going to be in a shallow recession, and then the Fed is going to cut, and we're going to come out of the recession and hopefully have some sort of meaningful growth and not have stagflation.
Mike, really good to see you today. So markets have come down an awful long way. I'm just looking at Amazon, which has come from $188 in July down to the current level of 107 after the big rally we saw in it yesterday as well. Have these stocks come down far enough? I'm talking about the stocks that are still going to be around, not the ones that never had a decent growth model.
Yeah, I think that's a good point you make, because there are plenty of stocks out there right now that are imploding because they have no earnings. So I wouldn't even speculate on those kind of names. But in the names that you're mentioning, names that have solid earnings that have gone down a third or 40% or 50%, I think there are some opportunities out there right now for investors. However, I would be very, very cautious about, to use a poker analogy, pushing all your chips in at this point, because I still think we could see lower lows if the wrong kind of news comes out. What if China somehow surprises with some bad news? What if gas continues to increase in the United States, goes up another $1 a gallon? You could see lower lows. So I think you average in. Don't go all the way in terms of pushing all your chips in, but there are some opportunities to start taking bites at the apple at this point.